Hi traders, welcome to this video from Admiral Markets. My name is Chris, and today I'll be taking a look at technical analysis using trend lines that offer, in my view, potential breakout spots. Before we dive into that though, and take a look at the majors, please be aware of these two disclaimers. First of all, this video is shown to a global audience but may not be suitable for everyone. Please visit admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity to find out if it is suitable for you. Second of all, please note that trading for exchange and global financial markets is considered high risk. Please seek the advice of an independent financial advisor for more information on that. This webinar is for informational and educational purposes only. By continuing watching this webinar or video, you agree with this disclaimer and you are aware of the risk involved when trading. Alright, let's start with the pound versus the US dollar. Basically, price made a small upside with the trend. And in my wave analysis, I was indicating that this already could be indeed a wave B, because this could be a wave A due to the momentum, and the upside might be limited also due to not only wave patterns, but potential trend patterns with a left shoulder ahead and a right shoulder. So indeed, price stopping at the 61.8 fib retracement level and an ABC correction seems to be taking place. Price has moved back to the previous support level, as you can see, and that could be basically a level where price might bounce. This could be the end of an ABC correction, but it could also extend further. It could go beyond this bottom and make a breakout down to these fib targets at 134, 133.25, 132.50. All right, those are targets to the downside if price breaks support. So something like this could happen, break, pull back, and a potential continuation down to these targets. But then the targets in turn could again be bouncing spots for the overall uptrend continuation. All right, that could happen. So those are bouncing spots at the same time. Alternatively, if price bounces here with some, once again, I'm looking at price action candlestick patterns to confirm whether price will be bouncing or breaking this support zone. I'm talking about the blue line right here, right? So I'm looking for candlestick patterns there. If it does bounce, it could test the resistance trend line. What I'm really looking for though is a break above the resistance trend line for with the trend continuation. If it does do that, that looks good. If it doesn't, the head and shoulders pattern might play out and there could be a bigger retracement. On the hourly chart, one level to keep an eye on is right here at the -272 target, because of this support zone right there. That could be a hefty zone to think about of a potential bounce. Also, if we connect the bottoms like this, well, it's a shallow line. I wouldn't use that much, but yeah, basically support right in here, resistance right in here, and looking for a break down or up. If it breaks down, I would be looking for a bounce at these two targets, basically, or three targets, I should say, on the fibs. Now, keep in mind that the German elections are on Sunday today, so those political events, of course, always have potential impacts on the volatility of price. So let's see how the market opens. Whether there are any gaps, specifically, of course, on the euro, but even on all currency pairs, something to keep in mind. Ned and I, in fact, are going to take a look at the German election impact, the potential impact of the market, and look at the results on Monday evening at 6 p.m. Central European time, 4 p.m. GMT time. So yeah, that's something you want to check out. We got other webinars too, of course, taking a look at live markets. Tuesday, Wednesday, we have a lot of trading webinars. Thursday, we take a look at support and resistance part 2. So a lot of good things coming up. Also, if you want to know more about the German elections, check out the election page on Admiral Markets. You'll find it at the top. You'll find a banner there, and you'll get more info about the current events. Okay, now I want to take a look at the dollar yen. This is the daily chart, and well, basically pretty rangy, as you can see. Price not really knowing what it wants to do. It's just going sideways here. We got resistance, of course, here. We have support more or less here. So within that range, if you look at the 4-hour chart, basically I think that price might continue to make these up and downs for a while. Let's see if it breaks out. Sooner or later it will, of course. For the moment though, considering the range and the momentum, I think that there could be a pullback, continue up to the resistance. That might happen. Looking at the 4-hour chart, there seems to be 5 waves up, and I wouldn't be surprised if there is an ABC correction. If that does happen, if price breaks below this support line on the 1-hour chart, I would start putting on the 4-hour chart a fib from the very bottom to the very top. And I think that price might make a retracement down to the 38, maybe pausing at the 23.6 fib, bouncing at the 38, moving down to the 50 or 61, and then moving up again to the top of the bigger range. So that's something that I'm expecting. One moment will happen with the dollar yen, maybe not now. The trigger once again is the break of this support trend line, and then I think we could get a 3-wave down and then one more move up. So let's see. The support trend line is right here on the hourly chart. If price does not break that but breaks resistance instead, I think that there could be a continuation higher, and 112.50 is already taken out. So it will be, the next target will be 113, 112.75 zone. There's not a lot of space there, but on an intraday chart, there could be one more push up on this dollar yen. Eventually, though, I do expect a 3-wave down on the dollar yen, but as long as it keeps pushing up, it could continue to do that. If it does break through this support trend line, right, I would not be interested in the first break. I think in that case, 5 waves has been completed. 1, 2, 3, 4, 5. I would look for an ABC. Look for a candlestick pattern at the end of wave C, and look for that C wave down, because this is the larger A, this is the larger B in that case, and I'll be looking for the C to go down to that 5061.85. Regarding the euro dollar, once again, elections do occur, of course, today in Germany, so something to be aware of. All in all, this is in a bullish channel. You can see here bullish trend first of all, plus the bullish channel. Price is going sideways though within that trend, so there could be a bigger correction. I think price might make it down to 117, 116 before the uptrend could continue again to 122.50. That's something that might happen if price breaks through support. So let's take a look at the 4-hour chart, and you can see here price is ranging, but if it does manage to break through the support level, yes, 117, 116 could be retracement levels before price continues with the uptrend. Why am I bullish? Well, just looking at the daily chart, you can see why. I think that any dip like this could still be faced with support for one more higher high, which could create the divergence between the daily chart tops. We don't have any daily chart divergence as yet, so when you have divergence between these tops on the daily chart, that's when you can get the correction, a bigger correction. So I think this retracement will be small on the euro dollar if it does break through the support. Sorry, I should use blue, the support. Otherwise, if it bounces anywhere here, it could still be a range, and if it breaks above this resistance, there could be in fact a breakout to the upside. On lower time frames, you can see price pretty rangy. It could stay within this range, so it could use this as a bouncing spot, but it could also break out, so it has a double function at this moment. Looking for candlestick price action confirmations to understand whether indeed the breakout or bounce will occur.